The other one, which has had a decent enough move and brokerages believe will have a very good move in the next year, is Bajaj Electricals. Before we get the management, Prakash, a quick word on this stock. It's not really the one that we speak about too much very actively as a trade. 179 or 180 currently is Bajaj Electricals at. Pull up the charts and tell me what this stock can do. I mean, would you trade this one?
Well, structurally, when I look at the chart, it's still weak. I would not say it's strong. It's trying to form a base, and the base is around 160. It might hold. But to my mind, I think it needs to cross the 200 mark when we can say, yes, it's out of the woods. So if you're looking at a short-term trade purely for 200, yes, I would say that you can buy it, have a stop below the levels of around 170 or so, and then one could trade long for 200 zones. But to my mind, once it clears the 200 mark, then maybe 220 is on the cards. To my mind, there is some base formation going on, perhaps not confirmed as yet, but yes, we can buy it.
Who better than the management to talk about the new product offerings, their expansion plans, as well as the outlook on their fundraising. We've got Shekhar Bajaj, Chairman and Managing Director of Bajaj Electricals, who now joins in on the show. Thanks very much for being with us right here on ET Now, Mr. Bajaj. You know, most of your business is focused domestically, but we understand that you're also looking to hike exposure to the global markets, particularly in the small appliances segment. How different are margins and returns in exports?
See, exports is something which clearly we are seeing that with the exchange rate in our favor and the demand and the cost in China going up, we are finding that the export market is now very much in our reach. Earlier, the Chinese material was very expensive, very cheap, so we were not able to make much headway. But now we are finding that in the especially African, Middle East market, where they are not so much into the latest aesthetics and latest technology, who are not ready to pay a high price, we think that there is a great market. At this moment, our market share out of our total turnover, only 1% is exports. We are hoping that in the next 3 years that should go up to 3 to 4%.
And Mr. Bajaj, within the appliance business, you're also looking to introduce any new product categories, we understand. So can you give us some more details on the same?
No, actually we are going to continue to remain focused on what we are doing and which we are doing well, because the penetration levels in India are still very low. So instead of going into new categories just for the sake of being new in new categories, we would rather focus and try to make a better market share, whether it's in lighting, whether it's in small appliances in terms of irons and toasters and mixers and induction cookers. There's so much of scope. Water heaters is so much possibilities that we can continue to grow by at least 20% plus year on year for the next at least 8 to 10 years. So instead of just getting into new categories just for the sake of it, we will not do so. If you find that there's a category where there's a good opportunity and scope, we may introduce. But we would like to remain focused on what we are doing, where we are clear market leaders in small appliances. So we'd rather increase our lead rather than just diversifying for the sake of diversification.
What is your focus on the rural markets, Mr. Bajaj? With the elections coming up, how much incremental demand do you factor in?
The rural demand is not going to come because of election. More of lighting may take place because of election, that there will be a lot of rallies and all, so they will require more lighting products. But as far as small appliances is concerned, it has got to do with the prosperity of the rural markets, because because of election they like to give better remunerative prices for the various products, and therefore the farming sector and the agriculture sector will have better cash flow available. And because of the younger generation getting more exposure to what's happening world over, they also would like to have gadgets like mixies and OTGs and water filters and all. So therefore the scope and the demand in the rural markets is substantially going up much faster than it's expanding in the urban areas.
We have seen an improvement in E&P bills over the last few months. Projects have been flowing in as well. What's the overall order book like, and how much revenue visibility does it give you?
The order book was, as on end of October, it was about 1465 crore, and the orders are also being executed very fast. So we are looking at, that's why against the 3,400 crore last year, we are looking as a company around 4,300 crore, with the E&P against a level of hardly 700 or 680 crores. We are looking at over 1,200 crores coming out of the project business. Now, project business has some old legacies which we are cleaning up by end of fourth quarter, and therefore next year we hope to start the year with a order book of about 1,500 crore, and which should be all new and positive EBITDA businesses.
Are you contemplating any fundraising via the debt or equity route?
No, actually our funding requirements are just not there unless we go for some major acquisition. At this moment our debt equity ratio is only 0.2, so it's against a 1,000 crore limit, hardly we are using 200, so there's no cash flow issues at all. And plus, with the project, a lot of closures of old project taking place, our cash flow should substantially improve, so therefore our cash position will be quite easy. I don't see any issues on area of cash flows.
And what about any acquisitions? Are those on the anvil within the next 6 months to say 1 year?
Acquisition is something which is there in our mind for a long time, but unfortunately the type of pricing, the type of valuation which is being made are just something which mathematically doesn't make any sense. Maybe for a foreign company who wants to come into India, for them acquisition they are saving 3 to 4 years. We are already well established. For us, that advantage of buying a company who has a good distribution network doesn't excite us that much to pay a premium, and that's why we are losing out every time, whether it's a Preeti appliances or whether it is Maharaja appliances. We've not been able to look at that because the prices at which it has been acquired is much higher than what we would think is reasonable.
You've been quoted as saying that for FY14 you see sales at close to 4,300 crores, and given how you've clocked in around 1,740 crores already in H1, will you expect to better this number? And what are the targets that you're setting 1 year hence for FY15 as well?
No, if you look at it, we are growing by about 25% in the first 6 months, and though the second half is always stronger than the first half, but even last year it was stronger than the second half, and therefore we are looking at a growth of about maybe 28 to 30% for the second half, so that weighted average it will be about 27-28%. From 25% cumulative we should go, that's why we are saying from 3,400 crores to a level of 4,300 crore. The project business may go up from, instead of 1,200, may go up to even 1,300 crores. We are looking at that because order book is very good, as I said, 1,465 crore. So it's something where how much can be executed, that's a matter which only time will show in the next 5 months.
And how much of that top line growth will flow through to the bottom line for this year, especially since for Q2 we saw losses of close to 15 crores?
Right. See, 2-3 things happened in the second quarter. In addition to project E&P taking a lot of hit, there were 3 specific hits which were taken, which won't take place in future. One was that there was a 12 to 13 crores which we did for our Platinum Jubilee. We did a special publicity campaign for our 14 July. We completed 75 years. So we spent an additional 12 crores only for our 75 years campaign. Plus there's a 6 crores which was a exchange loss which we took, and another 6 crores was a special project which we had given to a consultant. So that was something which we had to take in that quarter, which will not take place in future. Also the billing against less than 500 crores in the first 6 months of E&P, the next 6 months is going to be more than 750 crore for the second half. And therefore with 750 crores of billing and therefore lot of new billing taking place, the hit which took place in the first 6 months, not much hit should take place in the second half. So it will be much better than the previous year 12 months for projects, though it will still be negative EBITDAs, but it will be much better than the previous year.
Thanks so much, Mr. Bajaj, for taking time out and joining in, giving us the views for FY14. The stock continues to languish, though, in the red. But let's take a look at the stock, which is doing very well for itself. At 652, it's Clariant Chemicals up.